Good afternoon. Thanks for joining us this afternoon for a quick seminar or webinar on Malta as a leading EU insurance domicile. I'm here from Chetcuti, Cauchi in Malta. We're an advisory group including law firm, tax office, and of course assistance with financial services. Also with me on this webinar is Mr. Chris Croft from the CEO of LIBA in the UK.
Hello.
Thanks for joining us, Chris. So thank you for joining us. So we organized a seminar back in September in London, again together with the LIBA, and several of the LIBA members were good enough to attend. So the idea here was to have a follow-up on a webinar. Clearly, Brexit is a concern for all financial services practitioners in the UK, the insurance market no less. And sadly, we seem to have as little light on the Brexit tunnel as we had all those months ago. So, Chris, could I ask you perhaps to let us know any updates that you might want to share with our listeners here from your recent non-stop running around Brussels, Frankfurt, and so on, and also perhaps shed some light on the current mood that you're finding there amongst the insurance market in the UK.
Yeah. Okay, so I think to start with the plain facts is that no LIBA member has yet had absolute confirmation from an EU 27 regulator that the business models that they're looking to implement as a contingency plan should we leave the European Union without a deal in place, which looks more likely by the day. No one's had confirmation that those will definitively be admissible. And as I think we discussed previously, that is mainly as a result of the fact that the relevant European legislation, the Insurance Distribution Directive, is silent on the question of whether or not insurance can be traded cross-border into third countries, which the UK would become. Most of the regulators that we speak to are waiting for some guidance to come from the Central European institutions, either the European Commission or EIOPA, the European level supervisor. But as yet, no guidance has emanated from them, and from discussions we've had, we're not entirely sure it's going to. So a lot of the meetings that we've been having is around trying to influence that process, and certainly ensure that we don't get the wrong answer, even if we can't yet definitively get the right answer. So that obviously creates an awful lot of uncertainty and confusion in the minds of our members. But that doesn't mean that they should stop progressing their plans. I think that's a very important message to get across is if you have EU clients and you need to be in a position to continue to service EU clients post-Brexit, then you need to have a contingency plan in play to do that. And it is very clear, whatever interpretation one takes around the fringes of the IDD, it's very clear that if you're providing intermediation services to an EU client, then you need to be licensed in the EU to do that. And so the sorts of business models that we discussed at the seminar, whether that's working with producing brokers in the EU and providing the service to place business into the London market, or opening a subsidiary to provide to take on that client relationship with or without a branch of that subsidiary back in London, they're all still viable models. And the important thing to do in an era of state of uncertainty is to work through a process as to how you've decided that the model you've got you think works and you think is consistent with relevant regulation and legislation. Demonstrate you've taken the right advice to support that position, and then implement it, because the secret of regulation is as much about being able to demonstrate you went through a good process as necessarily them deciding whether the answer you came up with was right or not. So we're very much encouraging members to carry on with their plans whilst we, as their trade association, try and uncover the certainty that we're currently lacking. And so I think in terms of how we're, as an industry, are facing Brexit, it is, that's the dominant feeling, is there's an enormous amount of uncertainty, not just around our own particular circumstances, but obviously, as you will have all seen, there's an enormous political uncertainty about where we're moving in terms of negotiations with the European Union and what the likely outcome of that is, which will then obviously have a knock-on effect to whether or not these contingency plans are really necessary.
Right. Thanks, Chris. So I think some of the larger insurance operators, whether management companies or brokers, might have offices around Europe already, so they are perhaps less impacted if they've already got in-house a license within Europe that they could deploy as and when required. When it comes to potentially smaller operators or those who are based in the UK and over time, through exercising the EU passport through freedom of service to acquire EU clients, have you got any indication of what your membership who have taken a Brexit strategy, whether some of them have already gone for an EU presence, so they've either acquired an EU license or in the process of doing so, perhaps speaking to licensed EU operators who may be able to, in some way, share the burden and the pricing element of continuing to place insurance for EU clients through UK businesses.
Yeah, so a number of our members have opened new subsidiaries somewhere within the European Union. Some of them have been talking to the authorities in Malta, some in other countries like Belgium and Ireland. And they are creating new entities that will be able to manage the client relationship with existing EU clients. The question becomes whether it is admissible to refer that client's business to a London broker for placing in London if that's the best outcome for the client. And that's where we're trying to work with European regulators to bring them to the right landing on that. And specifically the point we make to them, and I think this is beginning to now dawn on the EU institutions, is this isn't really a Brexit question. This is about whether it's admissible for EU clients to access global markets, which will be not just London. There will be EU clients in any of the 27 countries who have parts of their insurance placed in other parts of the world, in accessing capacity in North America or Bermuda or Singapore. So it's important that the Commission or EIOPA don't take politically motivated decisions now that the net effect is to cut the EU off totally from the rest of the world, because that's in nobody's interests, and very specifically not in EU's clients' interests. So we're hopefully resolving that question. But in the meantime, if you are a LIBA member just currently based in London and you have EU clients, you need to look at one of the possibilities of either finding an existing licensed EU broker to manage the client relationship for you, or opening your own subsidiary to create that licensed entity. And we're here to help you with the detail about how you might do that. But obviously a key question in that is finding the best location for you, which is why we're always participating in events like this to give people as much information about possible territories as possible.
That's great. Thanks, Chris. Unless you have any further comments that you wish to add, I'll move on to the presentation part.
No, that's great. Been very good talking to you. I think I now have to switch my camera off so people don't get to see me anymore. So I should do that.
I'll switch mine off. We'll go to the presentation. Thank you, Chris.
Thank you.
Sorry for that. Slight technical issue there. Hope you're hearing me now. Before I start off with the presentation, I do have a poll that I'd like to put to you, which you should be seeing up on the screen momentarily. And if you could vote on this, it would help me as we go through the presentation. So the question is, what is your greatest concern following Brexit? Would it be the lack of access to the EU market, or a loss of revenue from your EU client base? Option 2, if it's the risk that the UK may become less attractive in the global eyes as an insurance domicile from where to operate an insurance business. Whether the risk might be that insurance talent may, whether the UK may see a brain drain in terms of talent flight leaving the UK to go to any other jurisdictions, or if it's none of the above, and you've got a significant concern in what may happen following the day the UK leaves the European Union, please do comment within the webinar chat. All right, so I'm going to close the poll in a couple of seconds, and that's it done. So the results came in as almost 90% have a concern as to EU market access or the loss of revenue from their European Union clients, and just over 10% fear the UK becoming less attractive as an insurance domicile. I think some interesting results over there. What I'll cover over the next roughly 40 to 45 minutes is a quick view about Malta as a financial services hub, a bit about ourselves and how we are able to help any insurance operators or brokers outside of Malta consider Malta for their insurance business. We'll have a quick overview of the regulation and legislation surrounding the insurance market in Malta. I'll then round off with a quick view at Malta's corporate tax system, which is one of the most attractive within the European Union, and end off with some success stories of international insurance companies that have made Malta as their base, of one of their bases for operations. Malta is a small island republic that gained independence from the United Kingdom following almost 200 years of British rule. Malta joined the European Union in 2004, also joining the Schengen area for border-free travel and business. Malta also adopted the euro as its sole currency in 2008. Prior to joining the EU, Malta overhauled its financial services legislation so that it could offer a sound and attractive environment to establish itself as an international financial services center. Malta enjoys a very strong economy, in fact, one of the best performing within the European Union. Over the last 10 years, despite the economic turbulence in external markets, Malta's banks managed to weather the storm and continue to fare well in all the stress testing carried out by the European Central Bank and other regulators. thanks mostly to a fairly prudent approach and preference for maintaining liquid positions. Malta has found several international firms setting up here as they found it to be an ideal business location. Malta boasts a skilled local and international workforce and a complete pool of professional service entities to support businesses here. Malta has a single regulator for all financial services, the MFSA, or the Malta Financial Services Authority. While it ensures strict regulation, the MFSA is a pro-business regulator, encourages feedback from the market so as to ensure that laws and regulation keep up with industry evolution and provide an environment in which business may flourish. The MFSA is approachable to discuss new license applications where the promoters may present their proposed venture to the regulator prior to the formal application process. Malta has a government agency tasked with attracting foreign investment to Malta, and these offer a range of incentives to foreign operators who set up in Malta. Malta offers a diverse financial services environment with regulation and several operators in all the key areas, including funds and fund administration, also pensions, wealth management, crowdfunding, private wealth, capital markets with a main listing authority and a prospects MTF, and various other operators that make up the fabric of a strong and vibrant financial services industry. Moving on to ourselves as an advisory firm, Chetcuti Cauchi Advocates was established some 16 years ago by a husband and wife team and has grown from strength to strength ever since. With our international headquarters in Valletta, Malta's capital city, we also have a legal office in Cyprus with rep offices in Zurich, Hong Kong, and also London at Temple Chambers, where in fact I will be within a couple of weeks. We are international not only in our geographical presence, but also in our staff complement, now counting 200 staff between lawyers, the management team, financial services experts in different areas, administrative and support staff. Chetcuti Cauchi Advocates has been at the forefront of every piece of legislation issued in Malta in our field of practice by providing feedback from our experience in the market. We participate in the discussion fora and contribute to consultation documents surrounding new or proposed legislation. Between our partners and managers, we sit on councils or committees of the leading industry associations, including the Chamber of Advocates, STEP, the IFSP, that's a local institute for financial services practitioners. Some of us also lecture at industry events or educational institutions. We travel around the globe to explain the benefits that Malta offers as a jurisdiction from which to place business. We have advised many financial services firms through the licensing process who now operate successfully from Malta. For several of these, we were recommended by leading law firms around the world, including in the UK. At the moment, we do have a number of applications with the MFSA for UK insurance practitioners looking to establish a presence in Malta. We're a full services law firm aimed at corporate and institutional and private clients, and our key areas are financial services, international property, citizenship and residency, as well as tax. So we're able to provide the full service to our clients. Many people ask, why would insurance businesses look at Malta? Companies in Malta are governed by a clear Companies Act that's founded on the UK Companies Act. So we find that clients from England coming to do business in Malta find here a familiar legal framework for business. Malta also adopts the International Financial Reporting Standards, or IFRS, for companies, making this further consistent within the EU's and internationally accepted accounting framework. The European Insurance Distribution Directive was transposed into Maltese law, so any insurance brokerage set up under proper license in Malta may access the entire EU marketplace. Malta's unique geographical position means that as much as we are members of the EU and identify as European, we are also a Mediterranean state and form part of regional trade organizations. For this reason, several operators have used Malta as a portal through which to tap into the Middle East and Northern African territories and beyond. Malta is also the only country in the EU that offers the legal structure of protected cell companies or incorporated cell companies that may be used for insurance and insurance broking activities. I'll explain a bit further about the PCC, protected cell company, and incorporated cell company in a couple of slides. There are different alternatives that one may use to set up insurance business in Malta. It's important to point out that all operators and brokers do require their own unique license. One option would be to set up a standalone insurance company, be that an insurance placement company or an insurance brokerage. This may be fully self-staffed, in which case the operator would need to engage its entire governance structure, operational structure, and so on in-house. We find this to be the most onerous route and would require the highest investment, as one would actually need to set up their own office in Malta, staffed by at least one local director and a compliance officer, administrative staff to do the actual broking or insurance management work, apart from all the necessary support such as IT infrastructure, accountants, etc. While some work may be outsourced even abroad, the key functions do need to take place within Malta. Another option would be still a standalone company, however, one that is externally managed. So there are insurance management companies licensed in Malta, and their license permits them to provide insurance management to other licensed entities. The relationship here would be formalized through a detailed service agreement that would also form part of the regulatory license approval process. Finally, an insurance operation or brokerage in Malta could be set up as a protected cell company or an incorporated cell company, which I will go through over the next two slides. It is also possible for an insurance operation to be set up as a cell within an existing protected cell company. Naturally, in assisting clients with the regulatory process, we do introduce clients to all the necessary collaborators and support that they would require here on the island. A protected cell company starts with a core company, and this is the sole legal entity. The PCC, or the core, has a board of directors. Additional cells may be added via new share classes, where each cell is distinct from the other. Every cell has a management committee, but not a board of directors. The assets and liabilities within each cell and within the core are entirely ring-fenced from the assets and liabilities of other cells. So the fortunes or misfortunes of one would not impact on another. However, the PCC, including all cells, is seen as one legal entity. So any contract would be entered into by the board of directors of the core, following clearly discussion with the management committee of each cell. To give an example of one way how this works in practice, if a cell wishes to engage and employ a staff member, it would be the core that needs to employ the individual and then second that person, assign them to a given cell as opposed to another. The salary of that staff member could be attributed entirely to the cell. So that is one example of how it could work in practice. The client base is obviously proprietary to each cell, and there would be no disclosure of any client interest from one cell to the other. On the other hand, an incorporated cell company also has a core and different cells. The new cells are also added by share classes. However, the difference is that the cells in an incorporated cell company are actually seen as separate legal entities. Again, the cells are entirely ring-fenced from the assets or liabilities of other cells or of the core. And over here, contracts would be entered into by each cell. This is obviously a quick overview of a fairly complex legal structure, and detailed discussion would help determine whether this is suitable for a given proposed insurance venture or not. Looking at the insurance market in Malta, with the anticipated impact of Brexit, one solution for UK insurance businesses is to set up a subsidiary within the EU. Malta has witnessed a very good response to its insurance framework, and this has appealed to a good number of international operators and investors that have set up their licensed insurance agencies or brokerages or actual insurance carriers here in Malta. Malta's insurance market, as mentioned earlier, is regulated by the sole regulator, the Malta Financial Services Authority, and this incorporates all the prevailing EU legislation, including, of course, Solvency II. The MFSA is an autonomous institution. It adopts an open yet a constructive approach. So companies we normally help companies to have an introductory meeting with the regulator, where we could present the promoters and their business proposal. This allows the regulator to get better acquainted with the promoters, with the prospective license holders, and their plan of action to roll out an insurance operation from Malta. It goes without saying that anyone operational in the insurance industry from Malta, as it would from anywhere in the EU, are required to apply to the regulator for a license and proper authorization before any insurance activity is undertaken or any clients are engaged. With regards to the timeline, so we'll start with the preliminary discussion regarding the outline plan between the applicant and the regulator. We would then proceed to submit an application and what's called a scheme of operations, which is essentially a detailed business plan, including financial projections for 3 years and any key contractual arrangements that would support the license holder's ability to carry out the licensed activity. Naturally, due diligence is carried out on the shareholders, directors, senior management, any key executives or controlling parties, as would be the norm. and the MFSA would then issue a license, first by giving an in-principle approval where the basic plan for operations is approved, and the company would then have a couple of months to potentially set up a company, enter into any contracts, engage any staff as required, and then go back to the regulator to say, all right, you've given me an in-principle approval, I've now put everything together, can I now go ahead? And the MFSA would make sure that everything's in place before giving the final nod. Before moving on to the next part, which covers regulations and legislation, again, from a quick overview point of view, I do have another poll that I'd like to run, which is how do you feel Malta can best offer a solution for you in a post-Brexit world? Would this be by clarity and certainty in regulation, lower costs and taxes than the UK, a dynamic regulator that supports industry evolution, or if there is any other, please do comment within the webinar chat. If there's anything else, please do put that in the webinar chat. Thank you for those who voted. So there seems to be a fairly even split over here across the three points mentioned. There were also a couple of items put in, which I'll pick up towards the end of the of the presentation. So with an even split across the three queries, it's clear that all of these are interesting for those of you looking at Malta for the next way forward. I'll now take a quick look at some of the regulations concerning insurance undertakings and insurance brokers in Malta. Naturally, this is a summary or an overview of a complex piece of legislation, and we do need to go into detail with each client to understand how these would apply to their business. So, as is normal, the regulator allows for different classes of insurance and reinsurance business, covering both long-term and general business, life and non-life, etc. Corporate forms would normally be limited liability companies, protected cell company, or incorporated cell companies. Could also be, of course, a public listed entity. Where a company offers both long-term and general business, the license holder may continue to do so, provided that each business is managed in separate companies. The licensing time frame is normally around the 6-month period. Insurance operations that are established and licensed abroad may normally be permitted to re-domicile to Malta, subject, of course, to any local requirements being met prior to a local license being granted. Minimum capital requirements for insurance carriers normally range from the 2.5 to 3.7 million mark, although there are some variations. And a company offering both general and long-term business would be required to double up, essentially, add together the two minimum capital amounts. regulatory fees are very modest compared to the EU norm. Looking at insurance brokers now, clearly they're regulated in Malta under the Insurance Intermediaries Act. This is the act that transposes into Maltese law the EU IDD. Intermediaries that are established in Malta can carry out and passport their services throughout the EU. As would be normal from a licensing perspective, all qualifying shareholders, controlling parties, any executives and senior management who would effectively manage the company must be fit and proper persons. So both of good background as well as of the technical competence and capacity to ensure the effective and prudent management of the business. And the capital requirement for insurance brokerage companies is of just under the 60,000 euros mark. Malta also allows the idea of an insurance agent. An insurance agency would be appointed by an insurance company that is authorized under the Insurance Business Act, and the agent would normally be a tied agent specific to one insurance business. An agent who could offer multiple carriers of insurance in Malta would be deemed to be an insurance broker. An insurance manager, as I touched on earlier, is a company that is licensed to provide specialized managerial services in both insurance intermediation as well as insurance business. The capital requirement here varies from around 17,000 euro up to 58,000 euro, depending on the nature of the business and the specifics of the case. We'll have a quick look now at the corporate tax system in Malta. This is a system that has been in place for over 50 years, has been looked at and deemed to be fine by the OECD and the European Commission, and this works very well in practice. So we'd normally look at a shareholder, a holding company in Malta, and an operating company in Malta. In this case, the operating company would be the insurance operation. Now, to look at the tax by way of a simple example, let's assume that the insurance business has a net income of 100,000 euro at the end of a fiscal period. Tax would be paid at 35% to the tax department. A dividend of the balance, so of 65% or 65,000 in this example, would be declared and distributed to the holding company. For non-resident in Malta shareholders, the tax department gives a tax refund of 30 of the 35% paid, or 6/7. This would mean that the holding company would receive dividend of 65% as well as the tax refund of 30%, resulting in a net tax leakage in Malta of 5%. There is no further tax applicable to the holding company on receiving the dividend or the tax refund, or on paying the further dividends out to the shareholder. Clearly, tax advice should be sought in the shareholder's home country as to how the receipt of those foreign dividends would be impacted. So the dividend, full amount from the holding company, could be paid out as a dividend. The need for the two companies is the operating company would obviously be the license holder and in this case an insurance operation. The holding company is useful to combine the dividend and refund in one company such that it may distribute a one total dividend to the shareholder non-resident in Malta. We'll have a quick look now at some success stories of large international insurance companies established here in Malta. So Mapfre Middlesea Insurance came to Malta by buying out a local insurance that was Middlesea. Mapfre is a group operating in around the world and is one of the 10 largest European groups in terms of premium volume and one of the top 20 in automobile insurance companies in the USA. Mapfre Middlesea PLC is one company within the group, and this is a listed company in Malta, a member of the Mapfre Group, listed on the Malta Stock Exchange. The group did extremely well in 2017. 2018 figures are still pending issue, which was over a 50% increase compared to the year before. The excellent results of Mapfre Middlesea contributed to one of the highest results ever in the history of the group. The company does credit its success to Malta's stable economic climate and notes that the future looks bright for such companies. In fact, there's a quote from the company in question. Another company, the Argus Group Holdings Limited, and its subsidiaries form up a multidisciplinary insurance and financial services group. They offer their insurance services through different subsidiaries in Bermuda, Gibraltar, and Malta. And Argus in Malta is actually the second largest broker on the island. The company believes that Malta was a great example of its expansion strategy with which to target this part of the world, being the EU. I'll end here with some comments from the same Argus group, where in fact they mentioned that specifically with uncertainty over Brexit continuing, Malta is well placed to capitalize from the current situation with UK or British companies who still have European countries looking for some form of co-location or some business in the EU. And as a final screen, we just have some testimonials from different clients who we have helped to set up on the island, as well as their EU operations. So we do work very well with foreign law firms to ensure that companies with cross-border interests are fully looked after from both sides of their home country, Malta, and any other country that they may be operating with. I'll now be happy to take any questions that you may have. You should find some of our fact sheets or brochures that you may download that should be on the side panel. So I do invite you to do so. Clearly, they will have some more detail than what I was able to present in under 1 hour. Before closing off, I will add that I will be in London with one of our associates in a couple of weeks on the 20th and 21st of February, and will be available to meet anyone interested in going through some more detail, clearly in a more personalized environment. If you have any questions, please do send them in on the webinar chat. So I do have a couple of questions coming in. So somebody's asked whether there are any provisions to permit ship owners under the Malta register to purchase insurance outside the EU, for example, via non-EU intermediaries who do not solicit locally. That's a fairly broad question with some specifics. The answer to that would be that we would need to look at where in the world the ship is actually operating, or the different ships, and essentially what would be important to the Malta register would be that any claims can be effectively honored. So it would be more about relevance to the jurisdiction where the ship is operating. So currently there would be probably a preference for EU operators, but to my knowledge there is not a specific exclusion for them to acquire insurance outside the EU. I'd be happy to pick that up separately with the individual who queried that. Another question was whether the MFSA would allow the Maltese intermediary entity to refer business to a broker in London. Also, by the same query, how long would it take to set up a broker in Malta? The timeline to set up a broker, normally from start to end, would be around the 6-month period. Clearly, that's not going to happen before Brexit. So we could facilitate with introducing anyone to licensed entities in Malta who could arrange a fee sharing arrangement for any UK-based insurers or brokers to pass business through a Maltese entity, which would allow them time to establish their own licensed entity. Looking at the first part of the query on whether the intermediary in Malta could refer business back to a broker in London. Currently, as Chris Croft said earlier, no EU regulator or authority has given a position on this. So the fair answer, we believe here, is we don't see any reason why the intermediary would not be able to refer business back to a broker in London. And it is also possible for the, or at least part of the brokerage operation to be outsourced back to London, clearly to a business operating under a proper FCA license. Another query is whether it's possible to set up a branch instead of a subsidiary in Malta. Is that the case? How is it different, and does it cover the same regulatory approval? Yes, a branch could be set up in Malta, a branch of a UK company. However, given the lack of clarity in the Brexit negotiations, it may well be better to, or more prudent at least, to set up a separate Malta company, and then once there is more clarity on the Brexit situation, the UK company could acquire the Malta company should there be any benefit to having it within the same group. In any case, the regulatory approval process would be the same. The legal entity is only one part of the equation, which is the form. The regulator will be more interested in the actual merits of the application. So the promoters, their experience, their ability to make a success of the licensed entity in Malta. Thanks for the questions. Do keep coming in. I've still got another 3 or 4 to get through. So one question is, if we set up in a subsidiary in Malta, do we also need to employ staff and have a physical office there? So a physical office would be required, and a basic complement of staff would be required for the key functions to be carried out in Malta. Certainly the compliance and governance functions should be done through Malta. However, as I've mentioned earlier, there are licensed entities set up as insurance managers who could provide some of these services on an outsourced basis, and these any such agreements would be regulated by a fully documented service agreement. So there would be full clarity on what aspects are carried out by the UK company, what aspects are carried out by the local insurance manager, including use of office and use of staff or secondment of staff. However, for a UK company to set up its own self-staffed operation, then yes, it would need to hire staff and have a physical office. So just looking quickly at some of the other questions, we do have some that have covered broadly what other questions have asked. I will respond to all of these questions separately by email, and if any of you have questions you'd like to send us, there's my email up on the screen, steve@cclex.com. And I will be there in London in a couple of weeks, and I would be very happy to meet you individually and go through your scenario with a more personalized level of detail. One other query was on what is your view on an EEA intermediary exercising its right to provide cross-border services directly to Maltese domiciled firms. So this would be covered by the current rules and regulations in place. So as long as the proper passporting procedure is followed and the MFSA either approves or does not give any objection to that foreign entity providing cross-border services to Maltese firms, then there would be no issue with that. This is an area where we could also advise on. A couple more queries coming in seem to replicate queries that we've already had. So please, if you have any lack of clarity, please do get in touch. And I do invite you to download the fact sheets you've got on the site panel. These do have more detailed information on the different elements that I've covered here in the webinar. I believe this brings the webinar to an end. Chris, I don't know whether you wish to possibly switch on your microphone again, and if you wish to add any comments to wind up the session.
Yeah, no, thanks, Steve. Sorry, I managed to lose the screen for a minute, but I'm back. No, that's been very helpful for those participating. Obviously, we at LIBA are here to help also with any of your queries, so do get in touch if there's anything we can do to help. But thanks to Steve and the people at Chetcuti Cauchi for today. It's been really useful, and it's a really helpful contribution to trying to find the right solutions for our members and their clients.
Excellent. Thank you everyone who participated. As Chris says, we remain available by email. Thank you very much. Have a lovely afternoon.